So we're diving into the contribution margin income statement. Contribution margin income statement. Now, some of you might think, oh God, we have already passed income statement. Why would we need to study another version of it? But trust me, it is necessary. So let's just compare what our income statement from past looks like from financial accounting course. So we have sales, very briefly, yeah. So we have sales, we have cost of goods sold, and one cost of goods sold, sales minus cost of goods sold gives us gross profit. Yeah, gross profit or gross margin. And then we can calculate all of our selling and administrative expenses. Yeah, the total of it. Once we deduct that, we get to our operating income. Operating income, that is the amount before taxes. And after we deduct taxes, we will get to our net income. Yeah, so this is the basic format. If some of you are still confused at what is deducted and what is added, let me just put a sign here. So less cost of goods sold, then we will have less selling and administrative expenses and less taxes. Yeah, that will lead us to the net income. Now, when we talk about the contribution margin income statement, this is a bit of a different format that is used internally with management, and that looks something like sales. Yeah, so they both start with sales. As you can see, that's the same sort of logic in this case, but here we don't deduct cost of goods sold. Yes, we deduct less variable costs, and variable costs can be both product variable costs and period product and period costs. So and once we've deducted this, yeah, so product and period costs, variable costs, we get to our contribution margin. Contribution, maybe I should write it down because this is the first time for some of you. Yeah, contribution margin. And this doesn't end here. Later we deduct fixed costs. After contribution margin is calculated, now we can deduct all of the fixed costs. Again, the fixed cost can be both product, yeah, product and period. This is important that you understand the distinction because for some it might seem that it is very similar and probably cost of goods sold, it's what variable costs are. No, cost of goods sold are only product cost, and that could be variable and fixed cost. Whereas in the contribution margin, we calculate variable costs separately and we include product and period costs together. And then we calculate contribution margin, and only then we deduct all of the fixed costs, regardless whether it's product or period costs. And we come to our, yeah, after we deduct that, we get to our operating income. And for management, so in the contribution margin, we don't add taxes, we don't deduct taxes, and we don't usually calculate net income. So we usually just come to the end of the operating income, and that's basically ends our contribution margin income statement.